It sounds almost like this is really, at this point, a trust me when it comes to their profitability targets. It seems like there's a lot of wood to chop between now and that target in 2021.
There is. They have $7.6 billion in cash. They burned $1.6 billion in the most recent quarter. They do got a great cash balance, but that could go quickly. Credit the company for cutting expenses by $1 billion to really right-size the ship. But really, you look at these numbers, nothing really matters in the near term. This is all about what the long-term viability of the ride-sharing network is, and they'll be a player in that longer term.
All right. So is this investable now, or would you say no, not till 2021?
I would hold off a year. I think ultimately there's it talked about the return being anemic right now, the recovery for Uber, and I think that's just going to take a few quarters. There's no urgency to get back into this.
Gene, great to see you. Thank you.
Thank you.
Gene Munster, Loop Ventures. Karen, basically dead money for a year. Wow. Yeah. Would you say maybe even longer?
Yeah, I think so. Maybe. I mean, two things sort of jump out to me. Well, one is Carvana has been really interesting to me talking about how tight the used car market is. And all those people buying used cars are not going to return right away to Uber. So I see that as a more permanent change. And then the other thing is, what does adjusted mean? I'm a little hesitant to understand what adjusted break-even is, if it's sort of adjusting for all the things that make them not break-even. So I do think it's a great management team, though. I'm not feeling compelled to have to jump in right now, and I think the Postmates is, it's a competitive market. So I'm not dying to jump in right now.
Is this like buying the cruise line, Steve Grasso?
I don't know if it's as bad as buying the cruise lines or as early as buying the cruise lines. I think when you have to look at Uber, I think Karen brings up a great point. Shelter in place, then they start using Uber once they get back out, and then they realize it's taking way too long to recover, so they buy a used car or a new car. I think eventually this is the first quarter that we got a real chance to look at Uber to see what Eats was over rides, and it didn't really compensate. So I think you have the ability, if you wait too long, Melissa, usually the easy gains are gone. So I think you're okay buying this stock right here, quite frankly.
Yeah. Tim, what do you think? Quick thoughts?
Well, yeah, last night I actually was in a strange position of feeling that this was a good final trade, and I stand by it. And a 3% move down lower doesn't particularly bother me. We expected these numbers. We know where the rideshare numbers are. And in fact, the extraordinary thing is that this stock largely, I think, is consolidated around the $33 to $36 level for 6 months, even from where we were pre. Look, if you're trying to hail a cab in New York City, it's not going to happen. And I don't think it's going to happen anytime soon. Meaning, I think structurally, the same things you're talking about, used cars and news cars, unfortunately, if you're holding a taxi medallion in a lot of major cities, it's becoming worthless. Rideshare will come back. The fact that this company has largely held serve from even where it was pre-COVID when we were speculating about profitability as well. I actually think that's very impressive. And I think that the Postmates acquisition was very bright. And I think that they are a leading player and are going to continue to dominate in that space. I know it's hard to make money, but I'm more impressed by the stock action. You don't have to own it tomorrow, but if you're waiting for a year for this, you're going to have missed a big shot.